One is Violence Trader here again, and this is like a new pair I imported. Actually, I've been trading it before, but I just stopped trading it based on some reasons that are personal. And this is a breakdown, or let's analyze this pair together. Let's know what we're expecting, or it just this is more like directional bias. Directional bias. Okay, now let me just say this is directional bias. This is how I find my bias of a particular trade. Let me just come now. You see, nothing here yet, nothing here. I haven't done any markings here and stuff like that. So now, this is how I actually like trade. Like this is how I actually like find my trade, like find my setups. Okay, now first of all, this was where I stopped. Here, the market. This was where I stopped. I think this was last year. I traded this pair. It was last year. This was where I stopped my market. So now, looking closely, you can see we have our market structure to be bullish. So now I'm cutting this side off because I don't subscribe for my YouTube, my JGV premium. So let me just say from this side go like this, it's off. From here, it's off. Let me just imagine that price hasn't printed this. So now you can see from here the price has been bullish, printing higher highs and higher lows, breaking structures, and you understand things like that. So now this was where we stopped, where I stopped. You just put it that way. This is where I stopped after marking my break of structure, So now if I'm to like buy, I know that price definitely going to buy to this next zone liquidity, which is this high here. Let me map it out, which is this high here. So if I'm going to buy, that's definitely where I'll be exiting my buy for the meantime. So now let's get it. Let's go into the analysis. So now we have our break of structure to the upside. This is not a break of structure, this is a sweep, this also is a sweep, and now this is a break, but it's not a market structure shift because it's not a major low. Understand? It's not a major low because this is the major low here, this is the major low, this is a high here because this is the last low that caused this break of structure, and this is a break of structure. Also can also serve as an engineered liquidity because this is not a break of structure. People say this is a break of structure, so okay fine, market structure shift, but no, it's not a break of structure. This is a sweep. So now this is a break of structure, this is another break of structure here. So now if this break of structure complete 3, that means I'll be buying from that week. I'll be taking my buy trade from this week here. I think I'll go down lower, then I'll look for my buy trade around this place here. So now 3 break of structure close to a point of interest there because I'm thinking there's a point of interest there. I'm not thinking, I'm already seeing like a point of interest here because actually we can see a sweep of liquidity of this previous candle here. This one that price made here, then before this long week here that price made. So now this is our second break of structure. I think network will give me issue. My Wi-Fi. So now this is our second break of structure. You can see all of them closed with a full body candle. You can see they close with a full body candle. This second break of structure. Then now this is the third break of structure. You can see third break of structure. The third break of structure. So like I said, 3 break of structure, then the POI will be closed to continue bullish movement. Here I could have just mapped out the whole POI, but I will go down to like the 30 minutes time frame because that's where I get my entry point of interest. We'll go down to the 30 minutes. Okay, in the 30 minutes, what do we have here? Okay, let me organize this. So in 30 minutes time frame, this was what we had. This point of interest here. Okay, so you see price came, then reacted with the point of interest here, then if I'm to take this buy now, this point of interest here, then now my stop loss, I'll go to the line chart because this is very very long. I'll go to the line chart, then put my stop loss below this line. Then now, where did I say my take profit to be at this next joint liquidity? So now this is an 8-hour trade. If I'm to take this particular trade like this, so now this is an 8-hour trade. Then switch back to my chart. So now this one now done and dusted. So now you can see here, I'm done with this one. But I can see here what's price doing. Price is creating series of lower highs and lower lows. Lower high, lower low. Oh, price has been creating series of lower highs and lower low. Lower highs, lower low, lower high, lower low, lower high, lower low. Let me map it. So now let me switch back to my 1 hour time frame because this is the time frame I mostly use for my for more clarity in the chart. So now, oh, you can see that in here. You see how everything just aligning. You can see a trend line. So now a structure currently is bearish. Then trend line liquidity. So whenever I see my trend line liquidity, I'm waiting for one thing: the market structure shifts. After our market structure shift, then now I'll look for my inducement. Come, let me go higher. 2 hours time frame. I'll look for my inducement, then my point of interest to ride it to the trend line liquidity is being taken out. So now observe with me here. Okay, see, this is 3 touches. So this one is the 4th one. It was enough break, but I couldn't like draw it more longer. You can see our break of structure, and break of structure. This particular break of structure here. This is the last break of structure here. I think, yes, that's the last break of structure. And this also was supposed to be a break of structure, but it didn't break. So now this is a sweep. This is a liquidity sweep. This is a liquidity sweep. So now observe with me. This is a high, this is a low, this is a high, this is a low, touching, trend line liquidity touch again. Then this now is sweep. Then price then came again. Let me go down to my 1 hour. You see how I switch time frame. You see how I switch time frame. I just don't use one time frame for finding my direction of the market. So now this is a sweep also. So now price, instead of price to like, okay, look at, observe with me here. Observe with me. So this is a sweep, like I said. And you see this candle. Observe this candle. After I sweep, we had this candle here. After our sweep of liquidity, we have this candle, and this candle responsible. Okay, now after the candle, you have this incomplete pullback. You can see how everything just aligning. You have this incomplete pullback. Then you can see our trend line liquidity, and this candle is responsible for our market structure shifts. You understand? Our market structure shift, because this was the last break of structure. This was the last high that caused this break of structure. This high now didn't cause this break. This is not a break of structure. This is a sweep. So now this is the last high now that's responsible for this. The last high that is responsible for the last break of structure. So you map it out, and that other block candle, this other block candle here, this candle here, you can see everything just aligning. Liquidity, point of interest, structure, everything just aligning. So now this is where our market structure shifts happen. Our market structure shifts happen here. MSS. Our market structure shift happened. So now our market structure shift happened here. So now this, now I will change it to my dotted line. That's how I identify my sweep. Then my liquidity, which is my inducement liquidity, I'll change it to my red line. So now you can see price is just printing higher highs and be going like that. Like wow, wow. Some people will actually give hope, like give up on this particular distance. I haven't seen the outcome yet. I haven't seen what I know. Price will surely come for this place, this point of interest, because it's very clear. Unless he has taken out this high, but once price hasn't taken out this trend line liquidity, price is definitely coming back for this point of interest. You see how confident I am. You see how confident I am. Price will come back for this point of interest unless he has taken it here. Then if he comes back, I will not take the trade. And you can see when price was going, it was printing break of structures. And you can see, observe inside here, you can see a trend line. Let me you can see a trend line also is being formed. Trend line also is being formed inside it. You can see a trend line is being formed. Trend line is being formed. So now price, if you finally break out, it will clear this trend line. It will clear this trend line, clear this liquidity, then cost for this point of interest. So now let's see the outcome. You can see price was just going boom boom, printing higher highs and higher lows, printing. I'm just mapping it out so you guys can see this is a break of structure. So this is a break of structure to the upside, break of structure to the upside also. So now this wasn't a break of structure. So that price then, this was the last low, created this high, then price boom, started selling. Let me draw this thing. Oh fuck. Just draw it once. You can see it. Point of interest here. This was the other block. And now this was that liquidity. And you can see how we just price just came. Tapped in. So what you just need more is patience. More of patience. You just need more of patience. Patience, that is just thing. Because price might printing this, oh, you see price have already gone. Next thing you are delete limit. Next thing price have come. As long as I'm very sure, as long as price, you see, just go straight. As long as price hasn't taken out this trend line liquidity here, this high, price just came to the high, created the trend line, also came to clear the trend line, mitigated the point of interest, and price just boom. You can see it, everything. A good valid order block. I tell my students this: a good valid order block have a sweep, have an inducement, have a fair value gap. That's very important. As you can see, your fair value gap is the gap between your order block candle and the next candle. You can see this is the gap here. This is your order block and this is the next candle. So now this is the fair value gap here. Then this is our incomplete pullback, which is our inducement liquidity. You understand? Then this is our next zone liquidity. Additional with the trend line. You can see it. Additional with the trend line liquidity. The price is very sure, like it's going to go and clear it. Price is going to go and clear it definitely before it comes back to any retracements, anything. But definitely you just have to like look for your point of interest, your inducement, your way to take your profits, then your stop loss below, a little bit below it. You can see it. So now 2 TPs just with patience, trading structure, liquidity, and point of interest. You can see it. Everything I just mentioned here is definitely what I use. Structure, bullish. Next thing, structure here was bearish, changed to bullish. Then liquidity here, trend line, inducement, order block, which is my point of interest here. Order block here. This type of point of interest, we call it indecision candle here. But some people do call it other block too, but this is the indecision candle. When the body is smaller than the when the body of the candle is smaller than the wicks, is an indecision candle. Is that indecision candle with inducement here? Price just mitigated it and then boom, take profit here. You are out of the market. Then next you start scouting for a next entry. You understand me? You just have to be patient, very patient to wait for your setup. Your setup shows you execute mercilessly. You understand? So now moving on, you can see after price printed all this hit TP, then we now have another break of structure. This is still on the 1 hour time frame. We now have our break of structure. So now Price gave this pullback before break of structure. So that means the point of interest around here. So now let's first map our inducement, because this inducement is first valid pullback before price. That price made then break structure. This can just be ordinary. This point of interest below this inducement. So now that's where we now switch to the higher time frame to see what price did here. So now this now is the next point of interest, or the next key level. This is closest to this liquidity, which is this particular one. You can pick this one. Also, you can pick the black candle, but I pick everything. Okay, now this is it. You can see it. Price don't just do its thing like anyhow. Price know where it's reacting from. Price know where it's going. Understand? So now this is like when you like price obviously know what it's doing. So now imagine just say now you miss this particular one. You don't say anything here and you miss this trade. Then later you now come to realization that okay fine, you missed this trade, or this trade was very valid. So now what you have to do is wait. Patience. So now price came, painted this. So now obviously we are buying from here. Our take profit should be at this high. It should be next general liquidity, because obviously no next general liquidity aside this. Yeah, you get me? There's no next general liquidity aside this here. So now if you take your trade, your buy trade here, you can see how all of them is just moving. Everything is just aligning. Sniper entries just come mitigate and they'll move. You start to have a sweet price action. Then now our take profit to be here. You can see 11, 9, 7, just wins. I did not discover this pair on time, but lie. So now what next to do after price have hit your take profits? You can come down to the lower time frame, or you can still be on this time frame. So now I will delete this. So this is what I'm saying here. I'm seeing the sweep here, sweep of liquidity here, and also this one is also a sweep, but I'm taking from the next candle. I'm sorry, from the previous candle. So now this also is another block. This is another block, definitely. So why did I pick this as another block? It's because of this incomplete pullback here. Because of this inducement liquidity. You can see inducement liquidity, then break structure. Here. You can see how everything just aligning: structural liquidity and point of interest, structural bullish, liquidity, sweep, inducement, liquidity, just how everything just aligned. Then this I switch it to my red. Then now you can see how we just aligned, everything just aligned. You can see just mitigated sniper. Then now where we are expecting to take profits at this high. Yeah, that's where your take profit will be. I wish I discovered this pair on time, wallahi. I actually traded it, but I stopped and focused more on JPY. You understand? I actually traded this pair so that we can see also this one. Your entry here. Then your stop loss. Like I said, stop loss is too big. Just go to your line chart, then put it below. Then you take profit, like I said, at this line, which is the next one, liquidity. So this is an 8-hour trade. Then this one too. I think US30 need more of a patient trader. You're not a patient trader, or you can't trade this US30. So if you trade higher time frames like me, 2 hours, 1 hour, 30 minutes. If you trade out 1 minute, 5 minutes, I think the price action in the lower time frame will be choppy. I don't know, I can't tell because I don't trade I don't trade the lower time frame like 5 minutes, 3 minutes, 2 minutes. I don't trade all that. It's very very noisy for me. You can see just wins. You can see it. So now like this, now we are done analyzing this pair. So now our next outlook is not yet out because I can't see anything yet here. I can't see anything yet here until price take out this and form new structure. So for now, this will be all for now. I'll be dropping it soon. Thank you all for watching. I hope you learned something. If you have any question, you can drop it in the comment section. Thank you guys.